Alrighty. Welcome, everybody. I am Jeffrey Turnmire. I'm your host here for this next hour or so. I'm going to discuss the roadmap line, which is my favorite indicator. It's based on Elliott wave theory and Fibonacci's. And I mean, it's basically tied into all the theme here today. And let's get at it. Hopefully everybody's excited. Hopefully you're, going to learn something new here with this very simple way to look at it. I commonly ask my followers, do you want to be a market analyst? Elliott wave theory is really, really great for analyzing the market. But I like to be a trader. I like to make money. So I ask my members, do you want to be an analyst or do you want to make money? So I have simplified down Elliott wave theory into a few high probability patterns. And I'm going to demonstrate the power of these with actual numbers to back it up, what the probability is here today based on this roadmap line. And let's get into it right here. So thanks for coming. Thanks for having me with Timing Research. Today, I want to talk about one of my favorite indicators for long-term trade setups, and it works for short-term trade setups. It works for all time frame setups, really. But we're going to discuss it on the daily time frame and then break it out into a few other things here. This is an indicator I built and coded from scratch myself. I'm going to walk you through why I built it, when I use it, how I use it, and then we'll go through some market examples and look at popular stocks today, as well as one of the Magnificent Seven is actually set up with a brand new entry on this indicator today. Right now, I'm going to share that with you and share the probability, the targets, even maybe the specific options I took today to exploit that move. Now, I'll even let you suggest some stocks as we get to the end here. So stick with me. And then at the very end, I'll give you a quick chance to claim this indicator for yourself if that's what you want to do. Sound like a plan? All right, great. Now, before we dive in, let me give you a mercifully short introduction to who I am, why you should listen to me here today. I'm definitely not a Wall Street veteran. I've never been to New York City. I've been to Chicago one time to get deep dish pizza for a couple hours, and then I left. Never been to the CBOE, the CFTC, none of that stuff. I don't have any insider connections. I've never worked at JP Morgan, no Morgan Stanley. No, I'm just a regular old guy, regular trader, just like you, that kind of figured this out. All right, figured a few things out. What I am, more than anything, is a lifelong tinkerer, a hard worker, and I'm an engineer. I kind of figured this out. I started paper trading in the 3rd grade. That's how long I've been interested in this stuff. All right, my first brokerage account, I opened it up when I was 18 years old. I have that's been more than a couple days. I've been at this my entire life, trying to crack this nut and figure it out. And finally, I figured out a few things that are easy to replicate. And I want to share them here with you. I'm also a civil engineer. I'm an urban farmer. I'm a maker, a builder. I'm an Eagle Scout, Scout's Honor. I'm just trying to be truthful and help other people. That's what I really love to do, is help other people at all times. I'm a troop leader. I'm a crypto miner. I'm a beekeeper. I'm an amateur pilot. A few other things that wouldn't fit on here, like black belt in karate. I mean, I do all sorts of things, Now, I love to figure things out. I love to accomplish things. I love to collect achievements and master skills. Like, I love this stuff. And my wife says the reason that you're drawn to the stock market is because you can't consistently beat it, ever. Like, it's always throwing you a new curveball. So you're always fascinated with the way this goes. I've been obsessed with figuring things out in the markets all my life. My entire life. And with the power of AI and all these backtesting tools that we now have, I'm able to put numbers and statistics to some of these high probability patterns. And if I'm being honest, the stock market is probably the hardest of my hobbies to have a ton of success in. I mean, and really, it's become a passion and a job more than a hobby. I collect hobbies. I master skills. I mean, I got Legos sitting right here, sitting right here on my desk. That's what kind of builder I am. But the market, it's just hard to consistently beat. I mean, I'm sure that you have that kind of experience trading the market, right? It always throws curveballs. It's always taking a left turn when you think it should go right. Seems like the brokers always have your platform loaded up and go opposite you the moment after you get into a stock, whether it's long or short, right? We all feel that way. And like I said, I have no Wall Street connections, no epic trading mentors, no guy that, discovered Bitcoin or nothing like that. I mean, I don't know anybody special. I just have a few decades of trial and error and the persistence to keep on going and find out something high probability for myself and actually find success. And the answer is why you should listen to me. Well, after a few decades of mostly struggling, I think I figured out some very valuable stuff, and it's relatively simple and easy to follow. Over the last few years, I've been blessed to make some incredible breakthroughs in the markets. And some of this stuff took me from mostly struggling to generating over $1 million in profits with my family's trading accounts in just actually a month. I took about 250,000 of my family's hard-earned money, flipped it into over $1 million in 1 month. 1 month during COVID. Now, generate trades. I've got trades that have over 300% net return last year, while the markets were all over the place. Winners and losers accounted for. I have several. I have a strategy that's 100% win rate with 80 trades in a row issued to real life people like yourself over 2 years. Now, I've developed an algorithmic opening bell alert with an 80% win rate and a group of beta testers who just kill it all the time. With some of my top trades, 40% in 9 minutes, 65% in 7 minutes, 108% in 34 minutes. Ridiculous, 475% in 35 minutes from that system. And I've ventured into crypto, predicting the top of Bitcoin in 2021, predicting the bottom in late 2022, and I've helped many of my readers and friends make a killing from those twists and turns along the way. And I don't just list all this stuff to brag and make you think I'm any kind of special market wizard. No, I want to show you I'm kind of the opposite, right? I'm just a regular dude from Tennessee who failed enough times to learn some pretty amazing tricks along the way. And I want to share them with you right here. And most important, the foundational lesson I learned is what I want to share with you here today. This is the market roadmap. All right. That's what I'm going to share with you right here. Now, the foundation of all my strategies is Fibonacci analysis and Fib tools, Fibonacci tools right here. Fibs are what makes sense to me. I searched through the market, trying all the, MACD, RSI, all that, PE ratios, PS ratios, earnings, this, that, the other, news. I tried just about everything. I've worked with tons of gurus along the way. Many of them have been on this presentation the last couple of days. Many of my friends that are gurus that I call friends have been on here. And, some of the people I've worked with along the way, just complete shysters and scammers. Some of them, honest people that have good stuff. And I've learned things from them, put a little spin of it on my own, and built upon what I learned from them. So you may see some things that remind you of some other people's stuff. And I mean, you can plug these fibs and these tools right into your TradingView account. TradingView is for free. If you've never used it before, absolutely free. I love free tools, things that people can do for free, because we spend enough money on data and subscriptions and access to things. I don't want to nickel and dime you here. Now, some of the common fib tool settings that I really like, really like, key ratios for support, the 1.0, the 1.272, the 1.6.8. I call them extensions, and sometimes it's called the projection tool, depending on your platform. You may use Thinkorswim or, a Ninja Trader, or, dozens of other platforms. MotiveWave, TradingView. I mean, it's limitless, all the platforms. Now, key ratios for retraces, I like the 382, the 0.5, the 618, the 78.6. Now, I turn these on with a retrace tool, and we'll show you that in a few minutes. Now, key resistances, the 618, the 1.0, the 1272, the 1618, the 2618, the 686, and I also use a retrace tool for those. And we'll get more into it here in just a minute. On real live charts, I'll show you this stuff here. Now, these are the two tools in TradingView that I like. I call it the 2-point tool. They call it the fib retracement tool right here. Why do I call it the 2-point tool? Because it takes 2 clicks on your chart. They have these 2 little bubbles, one right there, one right there. It takes 2 clicks on the chart to draw it on the chart. So I call it the 2-point tool because it takes 2 points. Right now, the other tool that I really like to use, called the 3-point tool, because it takes 1, 2, 3 clicks. It takes 3 clicks. They draw 3 little bubbles. They call it the trend-based fib extension tool inside TradingView. So these are the 2 main tools that I use every single day, just about on every single trade I ever make right here. These 2 tools, pretty powerful stuff. Now, here's some of the fib settings, and you probably can't see that, but that's okay. We'll go into an actual chart here in a minute, and I'll make it a little bigger, and you can see all these settings, but right there are the settings. You can take a screenshot and zoom it up if you want. Now, here's some of the other ones for the trend-based, the 3-point tool. This was the 2-point tool. This is the 3-point tool. As you can see, I don't really use very many fibs on the 3-point tool. And we'll go into actual live charts here in a minute. I'll zoom that up for you. Now, some of the terms we'll go through when using a 2-point tool. We have a high point, a low point, a swing high, and a swing low, as commonly called. We have a resistance level, and we have a target. All right, those are very common terms that I use. And when we use the 3-point tool, we have a swing high, a swing low. You know, the 3-point tool right over there. We have another high or low that we're going to use as the point number 3. And then we have support and or resistance. And we use this to compare, I use it a lot of times to compare prior moves to the current move. Prior moves up or down. Now, fibs help me identify entries, exits, stops, targets, pretty much everything you need to make a successful trade. They're like a Swiss Army knife of trading indicators. All right, but we can make them even stronger with EMAs. So EMAs, you may not be familiar. Like EMA, what is EMA? Exponential moving average. That's what an EMA. Now, the ones I tend to like along the way, and we'll get more specific about which ones I really, really like. The 5, the 8, the 13, the 34, and the 144. Now, these are Fibonacci numbers. If you've never seen this before, hopefully over the last couple of days, with all the people talking about Fibonacci, somebody's gone through what the Fibonacci sequence is, and you do recognize that this is 0 and 1 are the start, and you add those together to get the next number in the sequence, 1, and then 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, on, ad infinitum. Now, the color numbers are the EMAs that I like to use. And here, without further ado, here's the very code for my favorite indicator right here. If you use TradingView, you just type this in. Take a screenshot now. You can watch the replay, grab this right here. And like I said, at the end, I'll give you the option to get this code with an easy button to just throw it on your chart. You don't have to type anything in. But right here it is. All right. Now, what's an EMA? Circling back. You said EMA. What's an EMA? Exponential moving average. It's a type of moving average that places greater weight and significance on the most recent data points. Like, think about it. If you got a commonly the mainstream media will talk about 50-day moving averages and 200-day moving averages. Why on earth would you place the same significance on something that happened 200 days ago that you do on what happened yesterday? I mean, that's saying that over the last 200 days, everything that happened 200 days ago, which is almost a year ago in trading terms, that matters just as much as what happened yesterday in the market. Well, that doesn't make any sense to me at all. Now, exponential moving average puts a more significance on the recent price action than it does on that price action that happened a long time ago. That makes way more sense to me because what happened recently is what's really important in the market. I mean, the key statement there is it places a greater weight and significance on the most recent data points of price. I mean, that kind of makes sense, right? When you really, really think about it, that just kind of makes sense. The only truth in the market is price. And what price and volume, what people are willing to pay and how much they're willing to move at that price. That's the only real truth in the market. It's not news, it's not sentiment, it's not earnings, it's not fundamentals, it's not any of that stuff. It's not RSIs, it's not MACDs, it's the current price. That's the only real truth. Right here, right now, is what two people are willing to make a trade for. So you should place most significance on the current price and what somebody was just willing to make a trade for. Now, combining fibs and EMAs, I built what I call the market roadmap indicator right here because it charts a course through the markets for me and many of my followers. Now, it looks something like this right here, and we're just going to go through the basics of how it works, and then we're going to go through some charts that actually have it, and then we're actually going to go through lots of examples right there. So first, the price breaks through this orange line. The orange line is the roadmap indicator right there, and I gave you the code for it just a moment ago. So price breaks through. That's the first thing we need. Then we need price to reach some sort of exhaustion and come back and retest for point number 2. Now this can dive, my most current indicators and setups and everything require an actual price touch of that roadmap line right there. Now, point number 3, the price moves back away and creates an entry. Moves back away from the roadmap line. And the conservative entry is actually above the 61.8% retrace line, 618, as I'll commonly call it, right up here. And then we go for targets, and we have a whole variety of targets that we'll talk about. And I'll talk about specifically how high probability this actually is. So that's the bounce right there. That's the setup. We're looking for price to come back and test the roadmap line right like that. Now, when do you get out? Some guidelines. When you're happy with the profit, that's a great time to get out. When you reach a profit target, that's another really great time to get out. If you feel like you're running low on time, maybe you got into some options, maybe you need some cash freed up in your account, it's another great time to get out. And if price crosses back below the orange line and things aren't looking so good, that's another really great time to get out. All right. So those are 4 really good times to get out of a trade. Got the basics down, I hope. Now, if you want to see it on action in current setups ready today, give me a yes in the chat right now that you're ready to see some real live examples set up with entries today. Yes, yes, yeah. I see the chat blowing up with yeses. All right, awesome. So here's the first one. This might be the best one right here, Amazon. Now, what we see, I've zoomed this chart in. This is a tool that I have that automatically generates these charts for me. This right here reached a high point. Remember that swing high? This is the swing low down below that roadmap line right here in the middle. This tool ran an automatic Fibonacci analysis from that high to that low, right there, right there. There's the 618 line. Now, right behind my little drawing tool is the close above that 618. So that target all the way up here, you may be like, well, JT, you don't have a price listed on that target. That is the 1.1448 extension, which is 90% of the way to the 1.272, 127.2% extension. Now, I did bring a little bit of extra information on this specific trade right here. Right here, my tool generates numbers like this. And like I said, I'll put some real numbers and statistics to this. Amazon's a new potential entry. The target is 208.38. The stop is below 150.61. Amazon closed yesterday. That close right there was at 184.52, which left a profit potential of 23.86 to get to that green line up there. Now, that entry was at the open today. All right, this tool generated these numbers last night. The historic win rate of this is 95.45%. That's pretty smoking hot win rate, right? That's over 22 trades since 1997. Now, if you're a statistics type person, you know that 30 is a statistical population. So this is a little bit light from a statistical population, but it's very close. All right. A historic win rate of 95.45% when this particular price pattern setup shows up on Amazon's daily chart, 95% of the time is worked out, has a profit factor of 21.497. That means gross profits divided by gross losses is 21.5, basically. I mean, that's absolutely insane. This is an insane high probability trade right here. It takes about 20 days on average. Now, you'd be like, well, average, okay. You take 2 things. One's above average, one's below average. You average them together, that's the average. So out of 22 trades, on average, it's lasted about 20 days, which is pretty fast. But it could last twice the average. It could last 3 times the average. And that's trading days, all right? These are trading days, not calendar days. So you may be like, well, 20 days, that's 3 weeks. No, actually, it's 4 weeks because you have weekends in there, all right? Weekends don't count as trading days. So 20 days is actually about 4 weeks. Now, honestly, I went out to November. And looking at the current price on Amazon, I went for a 190. I went for a November 190 call with my target up here. When price gets to 208, I'm probably going to book that. And I actually put a closing order for 30 right now in case it goes super fast and gets me a lot of extra profit. So right there. Dun, dun, dun. All right. That's the first one. Now, I didn't bring statistics for all the rest of them. I could pull them up out of Discord, but I didn't bring all the statistics for the rest of them. But I did this one because it's super exciting, and I took this trade today. This is a hot, actual, fresh, new trade today. Smoking hot. All right. Now, the second one, fast, F-A-S-T. There's the high, there's the low, there's the entry, and there's the target right up there. And that's just above 72, as we can see from the price over here. And we'll go to real live charts, and I can pull any of these up again on real live trading view charts. Number 3, you might recognize this one, right? Nice cruise line. There's the high, there's the low, roadmap line, kind of flat. There's the close, and here's the target up here between about 2150 right there. All right, PCT, the next one. There's the high, there's the low, there's the close above, so the 618, and here's the target up here above 8. Probably about 850-ish, roughly. Here's the next one, TSCO. There's the high, there's the low. Here's the close above. Now, this red one wasn't a close above. It did poke above, but the close was actually below the pink line. So this is the actual first daily candle close above that pink 618 line. There's the target up there, right around 297-ish. Right there. Nice big fat upside. And VOYA is the next one with the high, the low. Here's the entry. This is a tool that automatically makes these static charts. I brought several of them. We can go look at the live charts and zoom in, zoom out. These are static charts, just pictures of charts right here. All right. Now, I want to thank you for joining me and look at those. Now, I want to teach you another pattern, and we're going to go to the live charts to do that. So let's go to a live trading view chart right here, and let's just jump into it right here. Now, you may see some alerts fire off. I have all sorts of things cooking and going on. I have several hundred members that follow me. It's actually several thousand, I guess, at this point. And let's just go down here. Let's just pan off the price and talk about a couple patterns. All right. Now, first off, we were talking about the roadmap pattern, where price comes up like this. It comes down, bounces off the roadmap line right here, and then comes up and makes an entry. So just to reiterate one more time, there you go, right like this. We get the daily close above the 618, and it can be any time frame really. We get the close above the 618. Price comes up here, right there. Now, why 1.1448? You know, Jeffrey, you didn't talk about that anywhere in your presentation. Now, I've done a lot of statistics and created some indicators more recently that have put some math and numbers to backtesting these high probability setups. Once we cross above the 618 level, right there, the 61.8, we have a high probability to get to the 1272. Now, I can draw a 1272. You can draw a 1272. Everybody who ever codes an algorithm can program the 1272. So what I find is that the 1272 sometimes becomes a fuzzy zone. If you've ever had trouble with Fibonacci before, you probably realize that sometimes we come up just shy of the Fibonacci line. Sometimes we go a little past the Fibonacci line. Now, I commonly think that it's because all of those people that program these algorithms, sometimes they like to front run the 1272. Sometimes they like to push price past the 1272. And, you know, sometimes we're a victim of all that. So what I did, I ran my statistics at 90% of the way to the 1272, which is the 1.448 right there. And you may be like, well, I really want to see the settings for this. That's cool. It's right here. Here's the Fibonacci retracement settings right here. You can take a screenshot. Here's the numbers I really like to use. I like to use the 50%, the 618, the 786, the 100. That's 100%. The 161.8, 161 point. The 1272 is down here also. The 2618, the 3618, the 4236, the 686. And if we go down to the bottom, I have the 1448 added on down here as 90% of the 1272. Now, why do I use all these? Because they tend to be targets that the market respects one way or another. All right, here's the other checkboxes. I do use fibs on a log scale. Now, when do you use log scale? When do you not use log scale? It's a common question. Like some people love log scale, some people don't. I kind of go back to those algorithms, right? Did the people who wrote most of the algorithms trading a particular symbol, now 80% of the volume on any ticker is algorithmic, and maybe up to 90% these days. You can look at Investopedia, it's a commonly parroted number, all right? Now, did the people that coded those algorithms use log-based Fibonacci, or did they use non-log-based Fibonacci? That seems to be the key. And you don't know unless you use both of them. Sometimes you have to flip the log-based Fibonacci on, and it's like, oh, it respected that perfectly. And sometimes it's like, well, these aren't hitting Fibonacci lines at all, and you turn it off, and boom, it's hitting those non-log Fibonaccis. And there's no good way to know except to look at it yourself. So right here, we have that entry, and we have that exit, and that's it. And can you go for a higher target? Absolutely. You can keep going, keep chasing these all the way up. We go all the way up, all the way up, all the way up, and the 686 is a less than 1% of the time we'll get a move that just goes straight up to the 686 right there. Very high percent of the time we go here. It's like 70% of the time we go to the 1.272. Almost 75% of the time we get to the 1.1448, and on S&P 500 particularly, in particular, we can look at the actual statistics here. See, oh, I turned on the roadmap line instead of the bounce right there. Let's turn off that. So the statistics specifically, you can see 70% of the time we get to 1448 after we fire off on the daily chart with 82 examples for the S&P 500 right there. And it usually lasts about 33 bars, 33 days. Now we can do this on any time frame, and we can jump down to the 15-minute, 64%. So some time frames are better than others. And the 1 minute, 72% of the time. All right, this is only looking at a short period of time, just recent 55 trades. And it takes about 42 minutes for this to play out on the 1 minute chart. Pretty slick tool, huh? I don't share that tool. That's my tool that I spent a lot of time building. Now, how do you know how to do this, right? It's very easy. It's all graphic. It's all easy. For years, I did this by hand right here. You just draw it on the chart and find it. Now, does it work upside down? Absolutely. It works the same way. So you've got the roadmap line drawing on the chart upside down, and price comes down through it like this, and suddenly it bounces up to it. And then we get this continuation. You've probably seen this move in the market lots of times, maybe without seeing the roadmap line there, but you've seen this move lots of times. Now price comes up, finds resistance at the roadmap line, comes down, breaks through the 618, and likely to get continuation right down here to these levels at the 1448 and 1272. Right there. Very common, very common. Now, that's the market roadmap pattern. All right. The other pattern I want to show you, very, very similar, except we don't need the roadmap line at all. All you need is price coming down, finding support, moving up right there, and then doing a retrace right here, right like that. Now we draw the fib line from here to here, and we stop at the 618. This is the key for this pattern right here. We want to see price stop right in between that blue line and that blue line, the 50% and the 786. Ideally, it hits the pink right there. Now, what this sets up is what I call a measured bounce. I use the 3-point tool here. We start with this swing low, we go to this swing high, we go to this swing low, and we set up right here. Right here. This would be the target. Now, I told you I'd show you how this all relates to Elliott wave, right? Now, the way this relates, use the Elliott wave tools. This right here is the ideal proportions for a wave 1 and a wave 2, and then the wave 3 will target up here. The 4 usually comes back somewhere in this vicinity, and then we get the wave 5 extension right up like this. Now, why do I like this particular pattern so much? Because also this happens to be the same as an A, a B, but the C, instead of coming all the way up here, usually stalls out somewhere right here. So I commonly draw the target right here around the 1272 because that kind of is some overlap of targets between a C wave and a 3 wave. You kind of know it's a 3 wave when we get the continuation up to the 1618 and the pullback that holds above 0.1 and then the 5th wave. But you never know for sure until we actually get that price. So this is the common leg right here that you can trade between both of these patterns right here, this piece right here, this high probability piece between these two patterns. Now, what's really sweet about this is that when the roadmap line is also sitting right here, and the 618 happens to be right here, it doesn't matter which pattern it is. We have a super high probability pattern, and I call it the rocket ship, that we can go higher right here. Now, you may be like, well, what the devil chart might be set up that way right now? Let me show you. Let me show you. There just happens to be one. Happens to be two. Very, very, actually 3 I've got 3 pretty common charts right now set up this way. I'm going to remove all this stuff, and we're going to go look at chart number 1. SLV. We have moved up, come back. I'll turn on the roadmap line so you can see it right there. We bounced at the roadmap line and the 618 right here. this move right there. When we move that other fib, look at the power move we're making so far. Already kicking off an entry. It's another really promising type move. Use the 3.3.2, that high, that low, right there. This sets this up for a very swift move up into the 29 to 30 area right here. Already launching off today. This could continue up here. And if things get really spicy, really excited, because we had this bigger correction back here, we could be looking at a move up into the 33 area right here, or even much higher, much loftier targets on up here, 35, 40 on up in here. Because this thing's been winding up for a long time, and it's actually lagging the gold chart right now. So we could see this breakout in a big way here in the coming days. I'm looking for a breakout above this 2750 area to get continuation up in a very big way. And you may be like, yeah, right. I don't believe it. That's cool. That's cool. You don't have to believe me today. All right. Don't have to believe me right now. I go through this stuff every day on YouTube, and you can come join me. So right there, yeah, 2718 right now is SLV, 2717 right there. That's the price. So 2750. That's what I'm actually looking for. That breakout above that right there, that prior swing high. We break out and go. It might go in a big way. Big way. I am heavy on this trade right now myself. Now, I promised another one, right? NQ. Now, my high probability statistic pattern thing. Remember, I told you about that market roadmap bounce back there? We did that bounce back there. We triggered it off. The entry. Look at the high, 30 trades. That's a statistic population. 71% of the time. Profit factor of 3. This is highly likely to get a big move up. That's just based on what we already had back here. We already fired off a high probability to get up to the 21,583. You may be like, well, NQ, what the devil is that? That's the NASDAQ futures, which you divide by 41, you get QQQ. All right. QQQ's price is basically NQ divided by 41. So this move right here, this low, this high, looky, we touched the 618 right there. Right there. This sets up that measured bounce. And look what else is right there. The roadmap line. This is that rocket ship pattern I was talking about right here. Inside of an already high probability trade, we have set another high probability trade right here. These targets become right up here in this zone. And we can easily get continuation higher. Now, how did I play this one? With TQQQ, a leveraged QQQ instrument right here. I played it with TQQQ. Now, you may be like, well, TQQ, I don't understand. That's this one right here. I actually took my entry back here. I've been underwater for a few days, and I'm looking for this breakout. Look at the high probability statistics down here. Look at this, 94% of the time. When this fires off, we go on for a 24 profit factor. Absolute ridiculous. Absolute ridiculous. I'm not saying it's going to work out. There's substantial risk of loss in all trading. Following some guy you just see and just met today. It's absolute crazy. But you can come see me every day on YouTube. Just jeffrytrader.com /YouTube, and you can come follow me. And David, if they'll throw that in the chat there for everybody. Or you can come Google me, Jeffry Turnmire, right on Google, and look at my YouTube channel. But these are absolute ridiculous numbers right here. And the target is right up there at 92. That's the target. Right there. That's the high probability trade. This is pretty sweet stuff, if you ask me. Pretty cool tools I built. Now, the cool thing about this looks like it's a 1, 2. Looks like it's a 1, 2, possibly a 3, 4, and we get a fifth wave extension on up even a crazier numbers. Whether that be on TQQQ, a leveraged instrument, or on NQ, or just QQQ. Doesn't matter. Same pattern, same setup. 618, roadmap line, all in the same vicinity, right there. This is high probability stuff right here. I'm really excited about this potential. I'm going to be really disappointed if we don't make it all the way up here to this 515 area. Right up there. Now, another chart. Another one. There's another one set up this way. Russell. If you don't know Russell, this is the IWM. All right, this is the futures for it right here. We did the same kind of move that we did on NASDAQ right there, kicked it off. Look at this high probability numbers right here. Look at this. There's not as many trades. There's only 9, 88.89% with a 6 profit factor right there. 29 trades in the history. All right, yes, the wicks do count in this for me because, hey, if you change it to a different time frame, the wicks change, right? All of a sudden, the wicks aren't the same. You change it down to a different time frame. All of a sudden, the wicks aren't the wicks. Change it down to 1 minute. All of a sudden, the wicks aren't the wicks. So I always use the wicks. It's the highest price and lowest price that traded. I don't typically use after hours trading, but on futures, there is no such thing as after hours trading. So this one has the bounce right here, that low, that high, 618, exactly right in there. Also, another rocket ship pattern potential. The market is really set to cook it to higher prices, potentially. It has a really good setup. If it fails, it's going to be a super big bummer. Big potential right up here, 2,400. Maybe like, well, I like IWM better. Same situation. This low, this high, 618, roadmap line bounce. Marker, that's the rocket ship right there. 233, potential target right up here. And you can use can't remember the SRTY is the short one. I can't remember the long one right at the moment. Just pulling a blank. Yeah, it's URTY, Ultra. So just like TQQQ a second ago, you could use Ultra Russell. Did go a little deeper than the roadmap line. Not perfect. Leveraged instruments do add significant risk of loss. They cut both ways. 65 on the potential upside right there from 46 to 65. That would be a pretty sweet move right there. What is the roadmap line? That's what we've been discussing the entire time. So what is it? Going back over to the presentation. Roll back, roll back, roll back. Right here is the code for it. It is a 144 EMA and a 169 EMA right there. Simple as that. All right. Now, we've gone through a few charts. All right. And I promised you a chance to add the market roadmap to your charts. So here it goes. You can get the full indicator code for the market roadmap and plug it directly into your charts, no matter your platform. But it's not just the code. You get an easy button added to TradingView or Thinkorswim. If that's the two, that's the two platforms I have easy buttons for. All right. Plus, I'm going to give you tons of education beyond what I've done here today. And that way you know how to use it to the best of your ability. I'll welcome you to a private trade room so that you can ask me questions, all right? Seek help, get more in depth, and talk to fellow traders that use this every single day in a big, powerful way. And every week, I'm going to send you a personally curated watch list of tickers that I believe are set up with powerful setups already set up to go on the roadmap line with all the stocks I think are making those strong roadmap bounce setups right there every single week. I do this all right here. You get a chat room, you get a masterclass, you get the indicator code, you get the watch list, you get the options 101 breakthrough, a walkthrough, and everything, plus a customer service team. Now, if that sounds like a good deal to you, here's what you do. No, wait a minute. Inflation's been sucking, right? 49 bucks. Come on now. So how about I cut you a much, much better deal? How about 90% off? How about I give you $5 right here? You can go to jeffreytrader.com/MRMYT or give the team a call, 321-888-3962. Press the number 1. to get started with me today for $5 right here. I'm going to give you a watch list every week for 3 months for that $5 special. Plus you get the indicator, plus an easy button and all the things right there. Super nice right there. Now, how about I do your requests? How about your live market charts? Does that sound good? Maybe on your tickers that you want to request? We can do that for the next 10 minutes or so until David kicks me out. So let's go back to charts. That sounds cool. And we'll just cover some charts. All right, let me turn this back off and turn that back off. And it looks like I saw Bitcoin, BTC, USD. Let's turn on the roadmap line, turn off the bounce. So here's what we got on Bitcoin is that it's down below the roadmap line. This is a big question mark for me right now. I cover this every day on YouTube here, just so you know. This is significant resistance to going higher. Now, we also have a few other things. You'll be like, well, I see lots of stuff drawn on this chart. So let's remove it and just talk straight up here. This is a downtrend of highs. That is a significant resistance. This is a low. That's a significant resistance. This swing high, this swing low. There's a significant resistance right here. Right here. And the roadmap line is another significant resistance. If we can't break through that roadmap line, break through here, we may make a lower low than this right here. It's already in the chart. All right. Be careful out there. That's somebody was calling me perma bearish. I'm perma cautious. I like to be very, very careful. Now gold, GC, it's already launching off, and I think it's probably well on the way, possibly to 2,700 right now. We have this high, we have this low, and those next levels, 2640, 2,700. That's kind of where I think we're going right there. 2,700, 2640, and possibly up to 2,860, maybe even 3,000. Possibly, absolute ridiculous, 3,500. One of these levels we're going to turn down in a big way. You can see we already had a lot of trouble getting through the 1618, and now we're popping. We're probably going to come right up here to at least 2640, if not 2,700, before we slow down. All right, next up, INTC. Intel is a garbage pile, and watch out below. That bounced off the roadmap line right there from the bottom. Broke down, bounced off, right down here. Extensions could come down to 15 before it finds support. Hate to see it. Right now we're sitting on that 2618. Could be down to 15, could be down to 11 or 12 right there. Doesn't look good. Doesn't look good. That's Intel for you. If you're betting on Intel turning around, think about this. NVIDIA added 3 Intels to its market cap yesterday. That's crazy. NVIDIA could have bought Intel 3 times over yesterday with the market cap it added. Just with the market cap it added yesterday. That's just insane numbers to me. Be careful betting on Intel. TLT. And here's the crux of TLT right now. We have this low in place, this high in place, this low in place right there. We may top out at 105. Right here. Now, is it logarithmic? Is it non-log? It doesn't really seem to matter a whole lot on this chart. And it's maybe a dollar's worth of difference there. Doesn't really matter a huge amount. Either way, highly likely we're going to stall out right there because of the way this is shaped up so far. This move up, this retrace, 618 hold, puts the target right here, 105 to 109. Probably find a significant resistance and turn down from that level. ES. Hit indicator instead of ticker. ES is right here. It doesn't have the ideal setup that we find in Russell and the NQ. But right there, we fired off this entry. Fired it off right there. It has a 56% likelihood of going higher. That's not the greatest. Why didn't I use that example as an example? Because it's not the greatest. Now, we did fire it off. It is possible that we're going higher. The S&P, much more likely than the ES. This high, or that low, that high. We bounced at the 50%. Not as awesome as the 618 and the roadmap line. So this one's got some question marks stacking up here. We could come up to this 5,900 area. Much more likely that we just stall at 5,800, possibly 5,880, maybe 6,000, maybe. So I think this is not going to not rise while NQ and Russell rise. So 5,800, possibly 5,880, maybe 6,000 if we get really, really, really sparky, especially next week on that rate cut announcement. Looks like we're gunning for those higher targets right there. All right. How's Google now? Still going into the abyss. Underneath the roadmap line, I would bet this is maybe going to make a lower low. Maybe down here at 130. As long as it's below the roadmap line, I give it bias for turning down and getting continuation down here. My bias is down if we're below the roadmap line on the daily. CLX, that's just a naive condition. CLX is just kind of going sideways. I mean, that's been sideways for a long freaking time. Why do you want to mess with that? Other Elliott wave petitions, they'll be like, oh, well, there's a reversal here, whatever. Yeah, great. Back to the question. Do you want to be an analyst or do you want to make money? If you want to make money, pass. Hard pass. Already did TLT, LUMN. Yeah, that's a dangerous chart right there. Absolutely dangerous chart. Let me show you another little pattern. Let me show you another pattern. You see this pattern right here. This is very related to this pattern right here. I call it the bubble pattern. You can go Google this pattern, market psychology. You see people get thrilled, telling everybody to buy in. They're going to be a genius. They're all going to be rich. Then you get this consolidation over here. Complacency. And then, oh no. Uh-oh. Oh no, we're going down, right? You might have seen this a few times. Oop. Look at this pattern right here. See how it's gone up exponentially? Consolidating. Once we break below, right in here, probably coming back down. Probably coming back down. You might have seen this over here. Seen this before. You may have seen it right here. Crazy up. Consolidation. Breakdown. This is likely to make it back down here around 200 to 300. Be careful. PLTR is working on a breakout. And there it goes. Beautiful. Beautiful, beautiful. So last time it did a roadmap bounce right there. And we're up at the extension at 35. And we're kind of stuck. Having a little trouble getting through. Been there for 4 days. Now, if it pops, 40 would be the next upside target. Right here. And the support I would expect down here at the roadmap line. That's the long and the short of it. NVIDIA. This one. Here's the warning. That looks a lot like that bubble pattern, right? You may be like, well, yeah, the sky's the limit for NVIDIA. This reminds me a lot of Cisco. When I first started trading, Cisco was briefly the biggest company in the land. And then everything was going to run on the internet. And then Cisco no longer is the largest company in the land. This can consolidate out here, not make higher highs, break down and come down in a big way. And you'd be like, there's no way NVIDIA is going to retrace. Well, just look at that. That's a 70, almost a 70% retrace right there. If we did a 70% retrace from the current levels, and we've done this multiple times in NVIDIA's past, well, there was a 70% retrace here, 70% retrace back over here. There's one over here, one right there. If we do one now, 70% retrace takes us right back down in the 40 zone. Ouch. Be careful. This stock commonly does 70% retraces. Probably 78.6. So we have the roadmap line sitting there intact. We did do a double bounce. Went a little deeper than I would like to see, but we did bounce off the roadmap line. So here's the levels. I'm a little more cautious on this one because of this rejection. Went a little higher, a little spicier than I want to see. This is why I'm not so enthusiastic on ES either. This has a very similar chart. We need to break above that to get up to these levels, 147, 153, right there. All right. It's my cautionary tale on NVIDIA. If you're chasing it long, be careful. If we break down below this roadmap line, we're probably going down in a big way. Down in a big way. Could be down to 40, but a little more realistic here. Just right down here is, you know, this 60 to 80 area right here. Did silver, did, and cat. Hit cat real quick. This one's got a bunch of chop going on. We made a good bounce effort, came back, made a lower low, and we just keep consolidating. This is not my favorite way to see lower highs. It's very similar to Bitcoin. Until we can break that higher high, I'm just not looking on the upside for cat. All right. And AU. See if I can pull that up real quick. AU. Looks like we're coming back to the roadmap line. NEM is my favorite gold miner right now. I have a 6-figure trade going on. Looking for this to break out above this level here and possibly get continuation. This is that mega bounce I was talking about, the rocket ship pattern. It bounced on the logarithmic chart that sets the target 167. Now it could take a while to get there, and it could get there fast. Could be out 2026, 2030, 2033, 2035. Could be a while. I have a lot of money tied up in this trade. Looking for this breakout and continuation up into this zone right there on NEM. Don't care for AU. Doesn't have the same setup. MGM just chopping sideways on the weekly chart here. Maybe like, well, what time frame should I watch? The time frame that shows you what's going on. MGM just chopping sideways. Not really very enthusiastic. UNG, potential for that one to form a reversal here, but that's still below the roadmap line. Really, the story is on the NG chart. We're starting to try to break through. That could take UNG higher. UNG is not performing quite the same. Oil, ultra short. That's in the toilet. UNG, kind of in the toilet. Cold, maybe the better way to play. Puts on that, maybe dropping right there. All right. To Apple. So here's Apple right here. Has a setup right now, cooking. We popped up here, retraced, held that support level, that breakout, that 618 level. 230, 243 is my target. Maybe 249. Right there. And I see crude oil right there. Pretty shameful of a chart. I am not sure that we're not going to make a lower low. Now, we did hold a perfect echo of a move right in here on the I can't remember which one it is. Let's see. I have it on the other chart that I draw on all the time. It's this move right here. There it is. We held that 1272 right there almost perfectly. Right there. Turning up and bouncing. If we break back above the roadmap line right here, we can go up in a big way. Tanks are, this is one of the ones I'm actually paying attention to fundamental news. We are at tank empties in Cushing, Oklahoma, and a short squeeze may ensue. The algorithms, hedge funds, big traders are all very, very, very short on oil, trying to push oil prices down, maybe for the election coming up in the United States. I think this can blow up in their face and go higher. I did get long out to 2026 on oil via UCO. I have a spread, 27, 37 spread, 27 long, 37 short, spread out to 2026 on UCO that I put on this week. Right there. Zion. And that's down to the roadmap line. That's support. If it can break higher, back above the 50 area, we could be looking at 54, 55. If it breaks down below here, it may go on a deep retrace. Could be looking at this level right there. Simple as that. All right. Looks like I caught up to the chat. And I think, David, you got somebody else coming up, possibly?
Yes, one more presenter to go.
All right. I'm going to wrap it up here, everybody. And
I will post your link again.
Throw it back up the link one more time here. JeffryTrader.com/MRMYT. Or you can come follow me on YouTube. Right there. JeffryTrader.com/YouTube instead of MRMYT. Thanks for coming, everybody. Thanks for having me. We'll see you again soon.